Hello, everyone. Welcome to the session on integrated accounting, specifically focusing on the insurance segment. In this session, we'll be talking about the kind of challenges which insurers are actually facing, especially with respect to risk-based accounting and how it integrates with the entire flow. To introduce myself, I'm Sufyan Khan. I'm currently heading the solution consulting practice for Oracle. I'm also joined in by Kitika Chopra, who's the product manager for the IFRS solutions within Oracle. I'm also joined in by Subin Paul, who's leading the data strategy for Oracle Financial Services. For the next segment, I'm going to hand it over to Subin, who will be going through what are the current key areas, trends, challenges insurers see, and how that would form as part of a complete integrated accounting flow. Subin, over to you.
Thanks, Sophia. With accounting processes increasingly sensitive to risk and actuarial sciences, we believe that risk and finance teams at insurers and banks need to agree on a few things. These teams need to agree on facts and the data underlying these facts. They need to agree on how these facts will be interpreted and ensure that there is consistency of this interpretation across time and teams. Reliability of these facts is just as important as to how accurate these facts are to base decisions on. Which brings us to establishing the lineage of data and process flows that brought this data across, and therefore provenance of all the information that we're working with. And finally, these teams need to agree on the grain of detail at which they will share and utilize data. When all these agreements are in place, risk and finance teams can work together to drive quantified risk and performance, and therefore risk-adjusted performance, where the ability to find unit performance for every unit of risk that is accrued can be understood. That will lead to the ability to allocate costs or risks and attribute performance to specific teams so that that analysis can go forward. This will render the ability for risk and finance teams to run simulations and forecast the shape and size of the balance sheet, shape and size of the profit and loss statement, and so on. And once all of these are in place, it'll make way for seamless accounting processes. Now, getting this done is not an easy process. This calls for a solution that facilitates a number of properties. It should be able to facilitate singular acquisition, hosting, and non-redundant processing of information. It calls for a system that enforces consistency of interpretation of all information and information about such information. Such systems should be able to facilitate a common, sufficiently detailed grain of data for risk and finance teams to work off. These systems should have efficient quantification engines, whether these go into the deterministic or stochastic range. These systems should be able to support scenarios being executed and therefore facilitate forecasting of multiple values without destroying business as usual numbers so that you can have side-by-side comparison of these figures. The ability to facilitate analysis of the output across multiple perspectives, those that suit risk and those that suit performance, is just as important. In all this, if you include regulatory mandates as well, transparency of data and process flows are extremely important. With the abundant choice that insurers and banks have in today's world of having systems deployed on premises or on the cloud or a mix of the two, such systems should be very elegant in how they can be deployed. And of course, typically these systems are not islands that can exist all by themselves. Instead, these systems need to be functionally integrated with financial domain-specific content so that they can work seamlessly with other systems and complement those to achieve seamless risk and finance process flows.
Thank you so much, Subin. And in this next segment, I will go through what generally see as being the traditional architecture and the current challenges we see within a lot of the insurance firms. So this is based on a lot of the experience we've had within the industry. And after speaking to a lot of insurance firms, we've tried to replicate something where we see the current trends and current issues. So if you look at the one which is on screen right now, one segment could probably be a lot of the information related to the asset data, which is actually being sourced. This asset data, including the policy and claim information, is going through multiple source systems, going through multiple ETL processes, including a lot of transformations which are taking place before going through multiple EDWs and then forming some sort of an asset data store. Again, this goes through a normal process of ETL process, where it goes into an actual modeling area where the data is actually modeled, especially with respect to the liability calculations. We're applying different economic scenarios, applying model configurations, applying ESG models, applying asset point models to form the data, not just from a calculation perspective, but also from a solvency to perspective. Then obviously you are extremely important is the aspect of the QRT reports as well as the different MIS reporting or so. Including the QRT reporting for the Solvency II specifically. And this is by no means a small exercise. It's a humongous exercise generating the data at the data point level or data model level. But again, another key challenge which we see is that from the accounting flow side, again, a huge amount of data is sourced from the policy side, from the accounting side, for the entity structures, for the different entities you have. Again, is going through a huge amount of ETL processes and transformations. Goes through a policy store. You're actually going through an ETL process again to have this as form as an accounting hub or a consolidation point where you have all your data associated for the accounting or for the different event types. Before this, you just start generating your sub ledger and before it forms part of your general ledger, before it goes into the level of consolidation. And let's not forget that the area is not just for the consolidation, but also looking at the budgeting and forecasting area, which is what Subin has been highlighting in the previous segment. So there's huge amount of integration points, there's huge amount of EDWs which need to be maintained, there's a huge lot of amount of on-prem work which is actually required. This reduces your operational efficiency, increases the cost. There's a huge redundancy in the amount of data which is spread across the different silos, and you are actually trying to map the process and duplicating a lot of the process across this journey. And what we have done with a lot of our customers, we have completely turned this around by making it operation efficient, by getting a one single data source, which is where Oracle's Insurance Data Foundation becomes a single data point or repository as a single version of truth. We have reduced the multiple integration points, so there's complete lineage. We have, on top of that, we have already deployed our architecture with the different applications for IFRS 17 and 9, including other risk calculation engines. But everything we have deployed it also on the cloud. So this is just not from a data sourcing point of view for the asset data, but even for the finance area where you're looking at the aspect of the entire general ledger, the accounting integration, including the area of creating the multiple subledgers, which consolidates back into your general ledger, the aspect of close consolidation, budget forecasting, including the aspect of reporting and having full lineage where you are able to drill back, not just from the point of the aggregate results from the MIS reports or for the statutory reports, or whether you're looking at any of the regulated, all the way back to the contract level, which means at this stage would probably be at the level of the policies. It's absolutely a seamless integration which we have adopted with the. How has this helped? This has reduced the total cost of ownership and improve operation. And in the next segment, I'm going to hand it over to Gitika, who will get into a bit more detail of how this has benefit across the board for a lot of our organization. Gitika, over to you.
Thanks, Sufyan. So with a clear and transformed architecture, insurance companies are enabled to make wiser decisions, offer optimal pricing, and enjoy the fruits of true performance. This architecture offers the option to start small and add on to the benefits incrementally with more use cases. This architecture is available on-premise and also is managed services on cloud, enabling customers to leverage existing investments. And with the multiple customers in this domain, the leverage of industry user groups adds to the various many other advantages. Which leads the organization to get an unfair advantage over its competitors. A seamless integration offers quick and easy realization of risk and finance deliverables, allowing better utilization of time and resources during a critical reporting cycle. With advanced use cases like IFRS 17 and 9 pre-built and available off the shelf with rich domain content, the users will realize the ease with which such complexities can get implemented. Not to forget, the Oracle commitment to regular updates and maintenance of this architecture makes this a future-proof investment for insurers. Just to round up, what we have been seeing here, the integrated risk and finance architecture reduces all data redundancy and enforces data reliability and consistency as a key objective. The pre-built integration with industry-leading Oracle ERP enables a highly efficient and collaborative design for ease of use and of implementation. With industry-recognized point solutions for IFRS 17.9 or CECL or LDTI available off the shelf on this architecture makes it a compelling case for companies looking forward to reduce the total cost of ownership and the time it takes to be fully compliant.
Thank you very much, Gitika. Thank you, Subin, for your time. In this segment, I hope this has been fruitful in understanding how we have tried to address the challenges which have been consistent within the industry, how we have integrated more of a seamless flow, at the same time not compromising on the auditability as well as the granularity, and overall providing what kind of benefits this has been providing to insurers across the board, including a benefit in terms of operational efficiency, upgrades, and faster time to market. Once again, thank you for your time.